Hello traders, happy weekend. Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting at 3rd of March until the 8th of March. I want to take this opportunity also to wish coming happy International Women's Day. So all the women watching this video, happy holiday, 8th of March, and for all the men, happy holiday to your wives. Don't forget some flowers. Now let's go to our business trading. As every week we are going through the previous forecast, which is here, and that's a good time to remind you that on Monday I will be publishing this PDF. Okay, so come back on Monday to the video, and just below in the description you would find the link to the PDF, the new one for the coming week. Also in the description you can find the link to join the Telegram group of ours, completely free, trading setups, ideas, educational articles, educational videos, and much more is waiting for you there, no cost. So let's start. The first pair we were analyzing was Dollar CAD. Our idea was sell the rallies, expecting it to go lower. So during the week, let me just open my big pen here so I can draw here. So during the week we got the correction, we got the drop, but this drop was blocked with a double bottom. Now, as always, it's very important to watch out carefully for signs against us. We got a blockage, we got a double bottom, we got a bullish divergence. Not just that, on the daily chart, we got a blockage here, still within the same range of prices, still holding the same supportive area, never managing to go lower. And the pressure by the MACD becomes bullish as well. So the market does not really want to go through this level. It refused to pay more than this movement to the downside. Well, that was still 100 pips, but the expectations were to sit at around 130, maybe even lower. It refused to do so. Now we get the blockage here and the turnaround. What could happen on such situation? So first of all, at this stage, I abandoned the sell plan. The market does not agree with the way I expected it to go. My expectations were like this. The market doesn't follow and give me basically the signs to be careful. So I will. And the question is, what's next? What could happen here is, as we had one false break on the bottom, we might get another false break on the top, and then it will turn to be an official ranging corrective cycle, which means with possible bearish continuations. However, there is a very healthy chance we are also going now for two waves correction and rally. So at this stage, I would not deal with looking for new sells. Would let the rally become exhausted. I would let the buyers here on the short term fight the bears. I want to see the proof from the bears that they are ready to take a new control. At this stage, no new setups and ideas for the Dollar CAD. The next one we had was the pound dollar, and our view was we are bullish, and we expected it to rally towards the 61.8. Here we are, cleaned, cleared, paid beautifully. That was our view. We were looking for buys here, or after one more drop if happens. And the pair managed to pay here 200 points on this movement. So the biggest question is what's next. Now my view remains bullish. As long as this long-term bottom holds, I still view that as a bullish opportunity. On the short term, we are on 61.8. Yes. We are holding some divergence. Yes. So little pullbacks are acceptable, and then look for buy opportunities. And looking on the 4-hour chart, we already start to see that bullish hidden divergence coming in place. So we might see the pound dollar trying to do something like that, right? Or continue straight, or making the double wave pullback, which would be ideal as a corrective cycle here, because the daily starts to show some kind of divergence. So there is a very good chance here that we will see the pound dollar doing something like that. Let me try to go short here. It will be a bit something like that. Would be a very, very possible scenario from the pound dollar. So we do need to pay attention to the coming levels. We have this level of the 132, 131 area, very critical zone. And we do have one more very important area, and that's around 130.50. From one of these zones, the pound dollar most likely would be expected to continue higher. And we, of course, would need to follow up and see if it holds. Basically, as long as we are above the 20 MA of this rallying trend, or the new renewing trend, I will be looking for dips and buy opportunities. The next one on the list of ours is the euro pound. We were bearish here, and the pair paid big time. That was our movement all the way from here. Now in such scenarios we had always two options: one, little range and breakout for continuation; two, that was the option to sell the rally after two waves. Both scenarios would be acceptable. In that place the continuation was pretty straight. In such occasion, got out of the mini range we got here, right? Once again, false break on the bottom, false break on the top, mini range pattern and a breakout. We got the straight continuation down, and we got the movement. So what's next for this pair? I remain bearish for the long term. However, currently we are holding the 61.8. We might face little corrections here, like with the pound dollar, right? We might see that trying to do something like that before sell continuation. It might be playing in a range here also. This little short-term corrective views are acceptable and possible. Our idea was and remains bearish for the long term. And of course, during the week, when if you manage to enter during the week and you got yourself good risk reward, be sure to make your risk management and trade management correctly. So winning trade with a good risk reward, don't let it to turn a loser. Next one on the list for me was the CAD Franc. Now CAD Franc had a breakout of the triangle, which in the majority of cases is a trend continuation sign. This consolidation pattern, not really triangle as for the momentumal trading, more like a triangle as a consolidation view here, simply because each of the waves inside is on a lower time frame a cycle or few waves by itself. That makes it to be a consolidation and not just a temporary stoppage. But due to the daily divergences, said if we face a false breakout here, we are going for a move down. Now look what happened with this pair. The beginning of the week was pretty much crazy. That was the breakout, right here. Then we got the false breakout, we created the lower lows, and then the idea was sell the rallies. Now it was brutal because you see the zigzags during the week, right? If you are trading such things, that's a heart shaking, because you are looking for sales and then almost breaking through a new high, again making a new low, again almost breaking through a new high. Such situations are very hard to deal with psychologically for traders. So the bottom line and the fact is that turned to be false breakout, and the daily double wave here suggested a correction, basically providing it. So the idea here is we do want on the short term to let it complete itself, and we do want to pay attention to these two critical zones, slightly below 0.75. down to 0.7440, which is this clearance zone. And the next one, if it doesn't hold, would be 0.74 down to 0.7360. From these areas, I would expect the pair to continue all the way up again. So on the lower time frame, definitely what would be great to see here is a slowdown. So something like that with a bullish divergence, right, would be providing from this area or the next areas as we discussed, would be providing us the next buy opportunity. So this is for the CAD Franc. Aussie dollar. Now this one becomes really not interesting. It was, where is it? Why is it moving so fast? Here. That's the two ways we have, range and second wave to be developed. Basically, both are still the same. We are still here within the range of prices. We are possibly developing the second leg with this bullish divergence. At this stage, the pair really doesn't provide anything new. Personally, it looks to me that after the failing attempt to get out of this high again, because this one was fake breakout, right? Fake breakout. So after the failing attempt to get the new high again, the second leg should be completed, the daily divergence should be completed, and should be confirmed by the 4-hour chart. So the 4-hour chart definitely could be here doing something like that, right? And when that becomes a divergence, then we can start looking again for our bullish plan. My view for the very long term does not change. What does change here is the entry, okay, the entry plan. Since the first one here, a couple of weeks ago, actually more, 3 weeks ago, could not deliver too much. That was the movement we got, right? It's still 150 pips, yes, but at that moment we got the blockage by the divergence against. It started to be very, very fishy. So in such situations, we need to wait for the next setup to come, and the next setup yet to happen. And that's the thing. And I want to remind you, according to the long term, this is what we are facing. We already got one false break, divergence already in play. Kicker came in 2 months ago, and that's why I believe these drops are for buys. The only question here is the question of timing. And for the timing, I would want to see the daily divergence completing, 4 hour forming it. And then by ideal, we can see here some kind of fake breakout, higher highs, right? And then looking for the buys. Could be great setup to follow. Now, pound Kiwi, we are bullish for the long term. And our plan was only for the buys, and the pound Kiwi so far delivers. Now this was a big rally here for us this week, about 400-500 points, simply perfect. My view remains bullish. Little pullbacks are okay to happen, but my view still stays bullish. If you are in a trade, again, something like 400 or 500 pips, you don't want to let the market take it back from you. So management in such situations is critical. Okay? Manage your positions correctly and enjoy the gained profits. The Euro Aussie, nothing changed. The plan was and remains 2 waves corrections or a ranging movement, and basically we are still in both possible scenarios. False break on the bottom, false break on the top. We are now possibly making a new false break or just developing the second leg. This or other way around, I would be only after sales, and the best way to confirm that is to gain that from the 4-hour chart. So if we are holding this range, right, that's the critical trendline breakout that we want to get and see. If we are to develop the second leg, then we want to see here the divergence forming, right? And then look for our sell setups. it will be great to see if it is about to complete divergence. It will be great to see the clearance of this area. A lot of stop losses will be located at this place. Alright, the next one is the Kiwi versus the CAD. Our plan was bearish, bottom of the range, sell the rallies was the plan. Let's take a look what happened since we got the rally, we got the sell, but now it's again holding the bottom of the range. Could not yet go and turn around out of this scenario, right? We never managed to get through. Now look at this engulfing pattern here. It starts to be a bit suspicious here with the sells. So for me this pair is back to neutral. It could easily break through the range and continue lower, but on the same time we could easily get it expanding slightly more, clearing the previous highs and then making the next delivery. So at this stage, for me, too many warning signs, especially with this engulfing. Look at that. It's making it right here with the fake breakout here. You see this bottom, right? You see here? It's fake breaking it with an engulfing inside the range. Pretty tricky conditions. That's why no more sells at this stage from my point of view. The next one on the list is the euro versus the dollar. Now my view was sell the rallies here, and well, we are stuck since we got this little rally, we got the divergence happening as bullish hidden. So the question is what's coming next. I still think bearish, however, and here is very important note. Look what happens on the 4-hour chart. It is a triple wave push. That is normally it's not mandatory, but normally this is a possibility for a deeper correction or a new shorter term, medium term trend to develop. So that's a very possible scenario. So what I want to see for the euro dollar is I want the Fibonacci levels to be broken fast. Sorry for my ugly drawings, but I wanted to see going through that fast, and then definitely it's a great opportunity for us to see the continuation. If it fails to go through the Fibonacci's, if it's managed to hold here, right, and fight, and in that case we will see some, let me use a free pen here. In that case we might see something like that, and if it refuses to break through, right, if it doesn't break through, then we might see that developing a bit deeper correction and a bit deeper rally. And that's why with the sell plan, must be very careful here. As for me, it's all about small risk in such situations. And if it managed to break through and gain a real momentum, because look what happens here. Look at this range. We're stuck in the range. Look how many spikes, how many empty spikes we're facing here. Suspicious sign. So yeah, I remain bearish in my view, but I do want it to gain momentum. If it doesn't, then we are going for second leg on the expansion. Now before I move on to the commodities, two more pairs adding on the list. Pound yen is the first one. The way it looks with, where is that? Here. We are heading towards the critical area of 149.80, 150, the psychological level. And we are very likely to see some fights there. So I believe this is what's coming for the pound versus the yen. On the shorter view, we are facing already Bollinger Bands rally. You see it marked with this beautiful indicator here. That was the last time it happened here. You see what happened since. So we might face a little corrections here. After that, clearing the top we expected, and then start looking for the sells. And the euro yen is also, the way it looks right now is heading towards its next cycle area, and its next cycle area is around 129. We also have the 200 moving average to pay attention to, that's 128. So this becomes as a critical zone for the euro versus the yen, and that means this is what we should face, and after that very likely start looking for the possible sells. So this is pretty much how I see that going, as long as we are holding this trend line, basically little pullbacks, rally to here, some divergence to develop at this moment, and from there looking for the sell setups. So this is the way I would be looking to trade the euro yen, or possible to trade on this week, on the shorter term of course. For longer term, currently the picture isn't really clear to me. Commodities, gold and silver, we were bearish here. No, where is my silver? Silver here. We were bearish for silver, looking for sells for the gold as well. Both deliver. Okay. The question is what's next. Now, due to the previous way the cycle developed here, I believe we are in corrective cycle. Corrective cycle should be double wave, or false break, a possible false break, and some kind of a range. This or other way around, the short-term bearish plan remains on, but for both gold and silver. Now this looks like a spike. This is a data problem. Several brokers faced it this week with an issue of a technical feed. It doesn't change anything of the cycles, of course. So we are looking for this, or simply some kind of ranging movement before the next buys. And the dollar index, where is my dollar index? Here. Let's go to find it. Dollar index, where did I put it? Here. So here we are. Sorry. This is our weekly chart. Okay, this is what we expect for the long term. Sell the rallies, right? So let's take a look. Here we are. So that's what we got this week. Okay, for first movement to the downside. Our plan: every rally we get, we are looking for a sell. And one of the scenarios we have here is if the second false break would be pretty much ideal to happen on the weekly chart, but if we don't have that, we want to work with the divergence that might be going and developing. And if this is happening for us, right, ideally, once again, ideally we should break through this high, right, and then gain the momentum all the way as a fake breakout down. Now this is what ideally should happen, but and this is an important thing to pay attention to. We have this kind of rally here, right? Movement down and a rallying correction. Now look on the current waves developing. This is happening through this week. Look at that. This is a very possible pattern of a trend change and continuation downwards. So if that develops something like that and break through this pattern, that means we would be looking for the trade continuation downwards. So if this pattern here on the lower time frame holds and breaks, right, breaks through this area, that's very, very good possibility that we are already ready for a move down. Again, by ideal, we should be cleaning this by ideal, If it will happen, by the way, that should be kind of a straight effect on the euro dollar to make the low as expected. But as with the euro dollar, due to the development of the triple movement on a 4-hour chart, we must be careful here. So again, by ideal, I do want to see one more clearance. Will we get it or not? Only market will judge. If not, then we know what we are following for the alternative, and that's coming here from the 4-hour chart, right? And the breakout. So watch it out, and let's see how that will be developed since. And then we have the DAX and the 2 critical levels that we are watching out. Here we are. So the first level in play, we are talking about the 61.8, right? First level reached. Next level might be reached, that's slightly higher. Now the thing here is we are developing a daily divergence, and the 4-hour chart we must get the reversal. So the ideal sign for us should be by break of the, no, where is my line? By break of the low, right? If we manage to break the low, we can sell the rallies. Now if we don't, and we climb higher, so we are going to play this, right? And potentially on the way to the new levels. So what is critical here is we start to see fake breakouts and making the lower lows. That would be the sign for us that we are ready for the possible bearish continuation. That's the trend line that is leading all that big double wave corrections from the daily chart. And as long as that's the case, we do want to see correct turnarounds, fake breakouts, and lower lows with convergence. That's what we want to see. If we don't see that, we can always go with the 3 high, 3 low, and sell the rallies. So that's the plan for the coming week. Keep in mind that this is non-farm payrolls week. The movements might be trickier, and statistically, non-farm payrolls weeks are better for the yen pairs, which means bullish on statistically, more bullish for the yen pairs, and that's where the euro yen and the pound yen came in play for the short term this week. So that's all. Thank you very much for watching. I wish you a wonderful trading week. I invite you to join my live trading rooms and to enjoy our trading every single day. We are going through all the most interesting instruments and setups that we are trading. To join us, on below in the description you have the link to join the academy. I hope to see you there. I wish you a wonderful trading week, and I'll see you then on next weekend. Thank you. Bye for now.